Welcome back. The Securities and Exchange Commission preparing a proposal to make quarterly earnings reports optional, potentially allowing companies to report results just twice a year. The president first made this pitch last year, saying less frequent reporting could cut costs for public companies. The plan expected to face some pushback from some investors who say it could reduce market transparency and transparency into companies' books. Joining me now is SEC Commissioner Mark Uyeda. Commissioner, good to have you. Thank you so much for being here. Tell us the plans at the SEC in terms of less frequent earnings reports.
Well, good morning, Maria. And the president made it very clear that he thought that a lot of companies face tremendous burdens by mandated quarterly reportings every quarter with the SEC. But what the president importantly said is companies ought to have the option to think about a different schedule, such as semi-annual. And that's what already occurs in other markets, like over in Europe, in the UK, or I should say in the UK. This idea means potentially less time spent by management focusing on regulatory requirements, more time focusing on their business. And for a number of companies, that's more important. Now, for a lot of other companies, though, they'll continue to report quarterly, because keep in mind, what the president asked us to do is think about optionality here. Give investors and companies the choice as to what is the appropriate reporting cycle.
Yeah, and what do you want to say to the critics who say, well, that's going to be less information and I want more information? But you made it clear that the president just wants the optionality. Some companies will stick to the quarterly numbers. Is that what you're saying?
I think that's right. I mean, there are so many companies where cash flow and quarterly revenues are very critical for their investors understanding what's going on with the business. But there are many other companies, such as those in the biotech area, where there are no revenues. It is all about whether your drug is going to get approved by the FDA. And already they report whenever there are material developments, for instance, in the drug approval process.
That's a good analogy. Let me switch gears, get your take on regulation in terms of crypto and digital assets legislation. It is day 2 of the D.C. Blockchain Summit. Policymakers and industry leaders talking about the future of regulation for digital assets. The SEC clarifying how federal securities laws apply to crypto assets in a move aimed at providing more certainty. The guidance lays out a framework for different types of tokens while signaling that most crypto assets are not considered securities. Regulators also aligning with the CFTC, setting clearer rules for markets as the industry continues to evolve. Commissioner, how do you see digital assets changing financial services in the future?
Well, this interpretation is a giant step forward from the SEC. It's something that should have been done years ago. The lack of clarity about what is a security and what is not, which has very, very important implications as to how you comply with the rules. Should have been done years ago. Instead, you only found out what the SEC thought when a process server showed up at your doorstep with a subpoena from the SEC. This interpretation comes after countless meetings. We held multiple roundtables, hundreds of comments that were submitted to the SEC, and so I'm really pleased that we're able to do this. In fact, when President Trump took office last year, a day one issue for the SEC was to form our crypto task force under the leadership of one of our other commissioners, Hester Peirce. So we created that when I was the acting chairman. This is the first important deliverable, but it was important also to get it right and to have all these conversations. I think this additional clarity that will provide by the SEC, at least until Congress acts on pending legislation, will help innovators, entrepreneurs, and other folks who have very, very interesting ideas of what could be accomplished by crypto.
Right.
Keep in mind, it's not the job of the government to say whether a business project it will succeed or whether it will fail. That's up to the market participants, consumers, and entrepreneurs.
So, do you want to see a lighter touch on crypto? I know you want clearer rules of the road, but is that a lighter touch framework for crypto?
I don't see it necessarily as being a lighter touch. What has been one of the most frustrating aspects of our crypto policy under President Biden was this enforcement aspect, which we went after a number of people involved in this area who there was no indications of fraud at all. When we say lighter touch, that does not mean going after a number of bad actors in this area. There are people engaged in market manipulation in some of these markets. If they involve securities, we'll continue to provide our investor protection market oversight role.
Well, look, when I look at what has taken place at the Securities and Exchange Commission, I can see this major shift right now in terms of deregulation. And I can see this push toward more capital formation, which is all very positive. But we're still waiting on the Clarity Act, right? I mean, you're watching Congress race to get this done with a lot of other things on their plates. You've got the disagreement over stablecoin rewards. Banks warning that, you know, if you've got stablecoin players, crypto players paying rewards, those incentives will pull deposits away from traditional deposit accounts, and they're not seeing the same kind of regulation. You go to a bank, you know it's FDIC insured. You know what you're dealing with. Do we know what we're dealing with when we're talking about crypto platforms? Do we see the same kind of regulatory framework for crypto and digital assets firms that we see from the major banks? And how do you address protecting those community banks where, you know, loans are very critical for people who may not have accounts at the larger banks?
Well, we see the current efforts essentially as a bridge to legislation that we anticipate Congress passing and that we're very supportive of. One of the things that's also very important about our efforts is we are doing this completely joined at the hip with our colleagues at the Commodity Futures Trading Commission. There's been a big debate as to whether certain crypto assets are securities or whether they're commodities. Our efforts, especially with CFTC Chairman Mike Selig out there, have been to make sure that whichever group it falls under, there is an appropriate regulatory scheme to make sure that those market participants have the appropriate levels of protection, transparency, and oversight.
Yep.
But I emphasize it's got to be appropriate regulation. It cannot be crushing regulation where the burden of regulation essentially kills the market for these products.
Absolutely. And that's, of course, what we saw under Joe Biden's SEC when Gary Gensler was, ramming down these ESG rules down corporate America's throats. And as a result, they pulled back and did not invest and moved out of the United States. I want to get your take on prediction markets, Mark, because this area is really gaining traction. Companies expanding offerings around real-world outcomes. The NASDAQ seeking SEC approval to launch options tied to major stock index, signaling growing interest in event-based trading. Arizona has just charged Kalshi, a prediction markets player, with operating illegal gambling business. And this is the rub right here. Is it gambling? What do you make of the Arizona charges against Kalshi, and what should we expect with regard to prediction markets?
Well, with prediction markets, one of the areas that we are working on with the CFTC is distinguishing between swaps and security-based swaps, and those are areas of jurisdiction for us. If it is a swap, the Dodd-Frank Act vested that authority with the CFTC, and I know the CFTC has weighed in on a lot of these points and how it interacts with state gaming laws. They have, I know, taken positions in court. But right now, what we're focused on is with the security-based swaps and to make sure it's clear when they fall under SEC jurisdiction. And if so, then we will make sure that if they're traded on regulated exchanges, that there's the appropriate level of oversight, surveillance, and other things that need to occur under the federal securities laws.
I understand, but some states are taking a position here. You just saw what happened in terms of, what we just reported on Kalshi. Bottom line, should Americans be able to trade on events like wars, elections, assassinations? Who's actually regulating that risk, Mark?
Well, ultimately, I mean, here, again, you have differing, overlapping regulatory jurisdictions, both at the federal and the state level. Ultimately, this is going to be a decision for the courts to say what the law is and to rule on the CFTC's preemptive authority over state regulation in this area.
Okay. We will be watching that, certainly. Commissioner, good to have you. Thank you, sir.
Thank you.
Mark Uyeda joining us. We'll be right back.